Right, the next thing is to look at the investing activities. Now remember I said to you at the beginning that investing is not limited to fixed deposits, although that would have an effect here if there was an increase or a decrease in a fixed deposit, but also very much the fixed assets. What money have you invested in fixed assets? So now if we have a look at our balance sheet, we will see that we had fixed or tangible assets of 2.9 million at the beginning of the year, and we've now got 3.4 million, which immediately will tell us that our fixed assets have gone up. But it's not as simple as that. You need to go back and look at your fixed asset note as we do in the balance sheet. Remember the fixed asset note, we would have our carrying value at the beginning, which is the cost and accumulated depreciation. Now, they don't have to give you that as long as they give you the carrying value, and it leads to what the value is at the end of the year. And then during the course of the year, there could have been an addition, a disposal, and depreciation. So the figures that you are given here in your balance sheet would, remember, be the carrying value. So we had at the beginning of the year a carrying value of 2,967,500. And by the end of the year, we had a carrying value of 3,440,885. So they might have given you the cost and accumulated depreciation, in which case you'd have to calculate the carrying value. But you're used to that right from grade 11. Now let's have a look at what information they give us in this exercise. And they say to us that fixed assets were sold for 100,000 Rand cash at carrying value. Now that is quite important there, that we sold it at carrying value, not at a profit or a loss. But as I did say to you earlier, at school level we will always sell at carrying value in the context of a cash flow statement. So we now know that we sold and the carrying value, and remember that's the figure that used to always go into your note, is what the carrying value is. So there was a disposal, so the fixed assets went down by 100,000. So you can fill in the missing pieces that you have. Right, that means I still don't know about the addition and the depreciation. But if you have looked further, remember we've already worked with depreciation. We were given it in the income statement. And there was depreciation of 33,500. And again, depreciation would have reduced your fixed assets. So we had 2.9 million. We've bought something which we don't know. So plus X minus 100,000 minus 33,500 equals 3.4 million. And you can solve for X. So either go 2.9 minus that, and then minus the answer from that, or work backwards, start with the last figure. And if you're starting with that, then you'd plus that, and minus away from that. And so that means that I have bought fixed assets, and so into my actual cash flow, the purchase of fixed assets then, which is a calculation that you have to do, is 606,885. Right, the fixed asset that you sold was given to you, and you will be given one of these figures normally, was 100,000. Now, secondly, what effect has this had on cash? Which of these have resulted in an outflow of cash, and which of these have resulted in an inflow? And obviously if you bought fixed assets, your money would go out. If you sold cash, your money would come in. And so the overall effect of this is that from investing, we've spent more money out than we've got in, so there's a negative cash situation there. Now, lastly, let's look at financing activities. Now, we can finance our company by selling shares, or we can repurchase shares. So anything to do with shares, and if there's any loans. So let's look at our shares first, and we're going to be focusing on the share capital account. Now, we know that we were given a share capital at the beginning and the end of the year. So in a similar way to do what we did with the fixed assets, we reconstruct that note. So your share capital at the beginning was 1,050,500. We already worked with that when we did dividends, because we divided that by R5. By the end of the year, our share capital had gone up. But we were told in the information that additional shares were issued halfway through the year. So we know we sold some shares, but we don't know how much we sold and for what value. These shares do not qualify for interim dividends, and that we took into account when we did the interim dividend. The directors bought back 35,000 shares on the 28th of February for R6.50 per share. Now please, you need to watch. That R6.50 there per share is split up into the average share price and the premium. Now remember, the average share price is the share capital part. The premium gets paid out of retained income. So when we're looking at the share capital account, we want the average. And that R6.50 is 20 cents above the issue share price. So your issue share price must have been R6.30. And so we need to multiply it to get the amount that we paid out for our shares. And so again, you can find the missing figures. You had your opening balance. We don't know what shares we sold, so we would have added on something. We would have minus 220,500, and that is our final answer. And this gives you a figure here of your proceeds of your shares issued of 1,520,470. Now, ladies and gentlemen, please just remember that I'm showing you full calculations. I'm reconstructing ledger accounts here. You don't have to do all of that because you're not going to finish in an exam, but you need to show these working. So you would have to have put 1,050,500 plus X, we don't know what it is, minus 220,500 minus the closing balance of 235,0470. You must show your figures because all of these carry marks. And if you just put a final answer and it's wrong, you're showing away a lot of work, a lot of marks. Now, if we sold the shares, the money would come in. But we repurchased, and we repurchased 35,000 shares. But now, this is your cash flow. How much cash went out? And we didn't just pay out our R6.30 like we put in the share capital. The amount of cash was R6.50. So R6.30 went into the share capital account. 20 cents would go into the retained income, but the amount of cash that's going out is both of it. So 35,000 times R6.50, and that's we're paying out, so 227,500 because we're repurchasing the shares. We are spending money. And then lastly, the other way we can finance our business, the other way we can get capital is by taking out a loan. Now we can see that we had a loan at the beginning of the year of 1.5 million. We've only got 300,000 at the end. Now sometimes they will give you extra information to do with your loan, in which case you'll have to reconstruct the loan account, because your loan could be that there was an addition to your loan, there could have been a repayment to your loan, and there could have been interest that was capitalized. So again, same as we did with the other notes, you have to reconstruct. In this one, there's absolutely no other information. So all we've got is that our loan was 1,525 at the beginning of the year, and it's now 300,000. So we must have paid off this loan, and we've paid off 1,225, the difference between them. But because we repaid, because my loan is less, that will be an outflow of cash. Right, so you got in some money from selling shares, you did repurchase, and you paid off your loan. And so if you balance this out over here, we've got a figure here of 67,970. So what did they do with this money they got in from selling shares? Well, a large percentage of it went off to pay off the loan, which was very good from a point of view of interest. And then finally, to end up this whole thing, your operations has got 337,205. Put that on your calculator. Your investing is negative. You spent out more money. You spent out 506,885. You got in 67,970 from financing, and you should equal your net change in cash and cash equivalents of 101,710. And that's how you can check and you can balance out. As I said to you at the beginning, you don't always find that they ask you the whole cash flow. They might ask you only sections. So you need to know the different sections as well. You need to know what goes into each section, because it's a little bit more difficult when they ask you only for investing and you can't, the other details are not there. So you need to know what, for example, goes under investing.